Hi guys, how's it going today? It's now May the 19th. It's a Saturday, 3 p.m. Central Standard Time here in Manitoba, Canada. It's actually beautiful outside today, and the last place I want to be is indoors. So I'm gonna get my strategy ready. I'm gonna share it with you guys, share with you guys my thoughts on risk to reward ratios and specific setups and possible entries and targets, and we're gonna go from there. And then I'll probably end up updating Twitter and also YouTube maybe later tonight. But it's so nice out, guys. Like, we're talking about the most beautiful weather here today that I have seen in an incredibly long time. Let me just check the weather actually. What is it outside? It's 19 degrees outside. I don't think we've had 19-degree weather yet this year. Celsius, that is. And tomorrow it's 24 degrees, and Monday, ooh yeah, 25 degrees, and it's a long weekend. All right, cannot complain about this at all. Maybe long weekend. What long weekend is it? Victoria Day, that's right, in Canada here. So a lot of people, it's not that it really matters to me, right? Long day weekends do not matter whatsoever. It's more so that my friends have the day off, right? So, yeah, I guess I get to hang out with them a little bit longer or whatever. Anyways, let's get going here with this analysis of ours, right? So let's start off with a 4-hour time frame on a log scale, first of all, okay? If I go to log scale, not percentage. I don't ever use percentage scale. Like who uses a percentage scale, to be honest? Like you just hold down shift and click here and you get your percentage gain right there as well. So playing by percentage, it's kind of weird to have it on a chart like that in my opinion, right? So anyways, let's get going here. So what you guys see here so far is pretty clear, this resistance and support. Wouldn't you guys agree with me here? Okay, that's pretty clear cut to me, right? Oh, by the way, don't mind the sound in the background. I live in a loft, and my washer and dryer is actually very close by. So whenever I do laundry here, I ran out of clothes. I don't really do laundry that often, and because I'm going out today, I realized I've actually got to do laundry, and this might be the very first time that I've ever had it on. Um, since I was recording, but I'm kind of pressed for time right now. So if you look at the log scale right here, okay, the log scale creates this beautiful trend line. Now, a lot of people don't like trend lines. People say it's coincidence, right? And yeah, a lot of people don't like trend lines, but am I a trend line trader? Not really. I'm a breakout trader, which is very different than specific trend lines, but I do acknowledge them to some extent, right? Because they are relevant. Some people say that it's just coincidence that it's actually hitting these points and bouncing off of it, and it's also a self-fulfilling prophecy. If you guys have ever heard of that term before, or what's the word comparison or whatever, is a self-fulfilling fulfilling prophecy, because well, it makes these 2 points, so the market tends to react at the third point where they might want to sell it off there. Then eventually the market will react there as well, because they see, oh wow, 3 points have actually formed. So yeah, I'm not sure what I really believe, but I do know that they have helped me in some way or another. I don't rely on them entirely, but it is a decent way to gauge your possible risk and rewards, and to see some setups, to see some resistances and supports as well, and just to see where in general a lot of price action is, right? So I'm looking at it right here, okay? And I see it's super clear slope trend line right here. And I also see clear as day as well on a 2-hour chart that this is 5 beautiful waves, okay? If anybody disagreed with this right now, yeah, that'd be really bad if you guys disagreed with my count right here, okay? Perfect wave division right there. And we see that this is in a highly leveraged market. So yes, guys, we will make sure that we acknowledge and respect these highly leveraged markets where a wave 4 overlap can absolutely happen. So just to be very brief on my count thus far, the way that I'm counting this is a simple ABC correction coming down like that, right? Where this one made a beautiful one-to-one correction, right? So if I'm talking about the one-to-one correction right here with the Fibonacci extension, right? Like how much more beautiful could that be, guys? Honestly, that's one of the most beautiful things I've ever seen, right? So here, I didn't short this because I was waiting to enter a long position. I don't like to exhaust myself out when swing trading, right? So I entered myself into a long position, actually around, not even there. I think I got some there and I sold it around there. I took some profit and then I added even more around 79.50, right? Yeah, that's what I did. Yeah, definitely. So my position right now is fairly good. I'm holding some definitely around 82.50 range right here. Okay. Actually, a little bit higher than that. I almost got the bottom there, right? And then I sold off about 55 to 75% of my holdings for my swing. I think I bought 5. I'm gonna have to double check Bitfinex after this because I do want to talk about my positions. So and when I play my swing positions, they're actually not in a margin position. So yeah. So then I picked some up at about 82.50, we'll say. I sold 3 Bitcoin, or it might be 3.5, right? So I held 1.5 left at 82.50, and I picked up another 4 at 79.50 right there, which I'm still in the position for. I've got no reason to close it, right? And I'm actually interested in accumulating even more right now because I'm getting ready for the next cycle, right? I hold some Bitcoin actually for my long-term holding, guys. I'm holding some from around this range right here, like around the 7K range and around the 7,800 range here as well right now for my super long hold that I'm actually not going to touch at all till it hits honestly 250K, 35K, whatever. I'm okay to wait 5 years, guys, to watch my $8,000 Bitcoin, okay? In my $8,000 Bitcoin go to $250,000. Okay, I'm cool with that. I don't give a crap if it goes to 5K, to be quite honest. I'm not gonna panic. I don't give a crap if it goes to 3K. I'm holding this Bitcoin. There is no stop loss for my long-term hold because Bitcoin will not diminish to zero. Bitcoin has a place in modern day society. It could potentially, or cryptocurrencies in general, could or just digital currency, we'll say, right? It's got the potential to usurp traditional monetary fiat systems right now. And we all know that from the ashes, a phoenix rose from the 2008 world economic crisis, right? Yeah, you guys know why Bitcoin was basically like how it was came about, right? Well, some guy was probably pissed off enough with the way centralized governments handled money and fiat. It's almost like Tether, where you can just print it out of thin air, maybe, right? And it's also it really pissed me off when I think about 2008, about how it was your responsibility, if you were American, to basically bail out these gigantic institutions, right? So and we understand why it was necessary for you guys to help, right? Hardworking, honest days working people, right? Bailing out these Wall Street people. We understand the why it was absolutely necessary. It would have been pandemic, guys. It would have ran pandemic in the world if we didn't help them, right? So some guy was probably pissed off enough where he's like, okay, you know what? We're gonna actually create or I'm gonna create some sort of digital currency system that's not gonna be controlled by anyone. It's gonna be on an unalterable ledger where nobody actually has control of it, and the people that actually own the currency are empowered, and they're the people that are controlling the coin, right? And miners as well, etc. But anyways, I'm so confident, guys, that Bitcoin is going to go up to 35K this year and well over 200K in the next 5 years, that my $8,000 Bitcoin, once again, really means nothing in the grand scheme of things when you think about it going for a very long-term hold, right? So that is my swing-term hold. I hold EOS, I hold Bitcoin, and I hold Sia coin. Those are my 3 main coins right now. Sia coin, I bought $12,500 worth, and it got me $1 million coins. Okay, and my average price is about 0. I think 1.8 cents or something, or 1.75 cents. When Sitecoin gets to $1, I'm gonna have $1 million. So can't complain about it, right? My stop loss is so tiny. I'm cool to lose like $2,000 for a possible long-term gain of $1 million. Okay, just to put it that way. So if you guys haven't heard of Sitecoin, no, they have not paid me in any way. As you guys know, I do not shill any coins. It is not me. I talk about me personally, and I try to be as transparent as I can. I believe that Sitecoin is definitely one of the coins that has the potential to actually, just blow things like Google Drive and Dropbox out of the water. It's just going to be one of those things that might actually catch on, guys. It's very, very cheap. It's very powerful. We're talking about a decentralized platform to host all of your files that businesses may even adopt one day, right? That's kind of cool to me. So, anyways, just like any blockchain in general that has a lot of potential, right? It could potentially change the world as well. Like IOTA, like think of IOTA, think of Ripple as well. Despite how much people hate on Ripple, okay, and even though the Swell conference didn't go so well, conference, if you guys remember that, well, they're disrupting things. Like think of Cybos and the Swift conference, right, back in October. They held it alongside. Sibos there, right in the same city on the exact same day to make a statement to say that, hey, you guys are not the only monopoly around. We're actually gonna make you guys an oligopoly, and we're gonna take a huge chunk of this pie right now. So there's a lot. They're very enthusiastic, guys, very eager, very ambitious. If you haven't noticed, to make blockchain technology thrive. So for my swing positions, I manage them very differently. They are not hold and forget strategies at all, right? So for my hold strategies as well, sorry, for my swing strategy, like I mentioned, right, 82.50, took some profit around 87-ish, around there, about 3.5 Bitcoin, so still held about 1.5, added some more at about 79.50 there, because my target was, guys, it really was about 7,800, didn't hit it yet, but I'm not one of those people that will just wait for a magical number, right? I'll actually wait to see signs of reversal and to see signs of bullish momentum picking up, where we could possibly just get a little bit of steam, right? So, and I'm also counting Elliott waves, so it gives me a little bit of an advantage as well, right? So for my Swift positions right now, I keep saying I want to say Swift conference or Swift position because we're talking about Swift earlier, right? But I mean to say for my swing positions, right? I'm going to add more, guys. And this is where I plan to add more right now, okay? I plan to add more right around the 81.33 to 82.63 range, okay? Specifically these ranges right here, right? So I don't care if it gets to 82.63 or 81.33. I will be gladly I'll be whoops. I'll be averaging my buys and laddering them on the way down, just like that. I'll definitely buy 25%. I want to buy. I want to buy 1.25 there. I want to buy 1.25 there. Sorry, I want to buy one here. I want to buy one here, and then I want to buy maybe one here, and then I'll actually end up buying like around two down over here. Something like that, right? I'll just average it out to 4 or 5 buys, or I might just go one, 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 and one, something like that. But I usually put more weight and emphasis on the bottom, right? Because that's where you'll get the best average, of course. And this is a golden ratio zone, guys. It's a golden ratio zone. Here's the 382, here's the 0.5, here's the 618. We count 5 beautiful waves going up. How could anyone deny these are literally the most 5 beautiful waves going up, right? We got a perfect, literally a perfect 1-to-1 extension, guys. Okay, couldn't have asked for anything better. It could have even been like that, in fact, okay, because if we break it down on a very low time frame, just break it down, break it down. The reason why I moved that one over to the right is because it seemed like we could have got a possible double top over here, right, for the 5th wave, just simply not breaking higher than the actual wave right there. Okay, so that is a very strong contender as well, where this one makes the beautiful ABC correction just coming down like that. So I count 5 beautiful subdivisions in here. It is literally as impulsively moving up as you can possibly ask for in a chart right now. So on a higher time frame, we would hope for it to bounce like that, right? We do not see any type of ABC bounce yet. We see some sort of flag that looks like it's about to form, right? Who knows? This could very well be the bottom already, guys, okay? Bullish scenario is that this could just have made the flagpole and it's just going now, okay? Let's go to a better time frame. That is now the way it was going up, and this is, you know, the flagpole coming down, something like that, okay? That could possibly be very well it. If I go to 1 hour time frame, right, this could have been the flagpole right here, you can say, or wherever you want to start it. So a flag looks like that, right? Just like think of any flag, literally. Like that, like a flag, right? It's a badly drawn flag, but you guys get the idea. So that could have very well made something like that. I don't really dig it too much, though. A lot of Twitter has been saying that I like to address things that people have brought up on Twitter. But yeah, I guess you could see it like that as well, right? So it could very well be it. It could be like an A, B, C, D, E type of pattern, right? But what I'm looking for right now is a retracement to this particular zone, or my bullish count will be validated, right? Or it's, sorry, this bearish count where we're getting one more leg down is simply invalidated by a really, really strong correction, to be quite honest, okay? If it retraces really strong to, for example, the 84.25 range, okay? 84.25 range, right? I'm basically just going to assume bullish this, in general, yeah, I'm just going to assume bullishness in general. If we break around that range, and I will assume a target of something redonkulously high, okay? Because if we look at here right now, we've actually almost hit the 382 level yet, or almost, right? Not quite yet. That's a 382 level, okay? So now what we're going to assume is we're going to assume bullishness where, yeah, like I honestly see 9K as a, okay, we're going to shoot for minimum, okay? Because we're going to say that wave 3 is often the longest and never the shortest, right? So what we say is that wave 5 is often the longest and never the shortest. So what we can generally assume, first of all, is that wave 3 right here will never be shorter than wave 1, okay? Because usually it's not shorter than wave 1. If it is shorter than wave 1, then it better be longer than wave 5, right? Sometimes wave 5 can be the longest, and wave 3 could actually um, can be the longest, but wave 3 has to be longer than wave 1. All this rule is basically saying is that wave 3 is never the shortest, right? It's often the longest, never the shortest. That's why it's going to hit a minimum target of a 1-to-1, okay? So we're just going to assume that first of all. Okay, so if we assume that it hits only a 1-to-1 extension, because we're seeing some major pivotal areas, right? So 8800, where did I just put it up there? Okay, you know what? I gotta annotate this properly for you guys first, okay? Let's get this up here. I don't want that to be seen quite yet. So I'm just gonna go over here actually and delete. Maybe I should delete this. I'll make it really clean for you guys. I don't really have too much time, but I want to be as diligent as I can, and I don't want to rush through a TA just because I have to head out, okay? So we see that this definitely hit a perfect 1-to-1 extension. It waves 1, 2, third wave of hit 1-to-1. And therefore, assume wave 5 can hit 1.618, right? And of course, it actually hit it with flying ease. So I want you guys to drill this into your head with Fibonacci extensions. And let me actually teach you guys how to use this properly, okay? We're going to delete all of this and make this a lesson video as well, just so you guys can be more well-rounded. You take it to the bottom of where the wave count is to where the top of wave 2 is, or sorry, where the wave count began. I'm delete even more stuff here because I don't want you guys to be overwhelmed, okay? So we take out this right here, where it began. Okay, click on that point. This is the Fibonacci extension tool. Click on the second point right there, and then click on the third point. The third point will always be at the end of wave 2, okay? And then we say to ourselves that wave 3 is often the longest and never the shortest. Therefore, we assume that if we buy it on either a breakout or during accumulation phase on a lower end here, right, where you are laddering your buys. But obviously a good breakout point was be right there. So you enter a position right here in the long with your stop loss. I'm always very modest with my stop loss. I'll choose something like even right there, right? And here I'm going to target, right? Target 1-to-1 extension. So I would have bought it on the breakout at 81.34. I would have targeted right here, okay? Whoops, I don't mean to do, whoa, that's weird, what just happened? Okay, so, okay, yeah, that would have been pretty much my play there, right? So always be generous with your stop loss, you know, like this was a tiny play, 1.68% gain, right? That's how you would have played it. You would have bought the breakout here. A play example would be to buy this breakout here. Breakout here and target the 1-to-1 extension for wave 3, okay? There you go. And an example here would be the exact same thing, right? You target 1618 just to give you guys a quick lesson video as well, you would have targeted the 161.8 extension with your stop loss slightly below the wave 3, right? So this would have been a really great example here as well for you guys next time. And guys, remember these rules, right? These rules are really easy to remember in my opinion, and they make you money. Like, just always take advice in general, right? Because I'm showing you guys proof in the pudding of how extensions with good risk to reward ratios and playing breakouts can actually make you very profitable. And I actually cover how long was my last video actually, okay? I just finished my lesson 13 video, guys. I'm putting in a lot of effort into my new lessons, like an immense amount of effort. For example, I just finished my MACD and histogram video this morning, and just to give you guys an idea of how long some of them are.
Good morning, everyone.
Okay, like some of them are like an hour 37, and I cover in ridiculous detail. Doesn't guarantee that it's going to come down. It doesn't, there's so much detail in each video. And there's over 5 examples in each one, right? Because I'm choosing 5 examples specifically. Some of them go way more. So I hope you guys are looking forward to my lesson videos that are coming out, because I think I approach it from a very different type of analytical perspective, where the main goal is to just teach, right? Just to teach well, and not to make a lot of jokes, and to maintain it fairly professionally as well, and have the atmosphere of very friendly and approachable type of atmosphere, because I want you guys to feel like you're in an environment where you can approach me anytime to ask questions, and I definitely want to help you guys out. So yeah, but what I'm getting to is there's so many examples in my videos, guys, that's going to be coming out hopefully tomorrow. I'm going to try to make another video later tonight when I get home. But you know what? If I have to make 3 tomorrow, I will, because I'm trying really hard to get this done by Monday, okay? So hopefully it's done. All right, so this makes a lot of sense. I just want to make sure that you guys understand this very well, okay? So when wave 1 forms and waves 2 form, not a lot of people actually play that breakout, guys, because they are very patient. They wait for some sort of pattern to form, some high to form, and then some low to form as well, right? And then once these clear resistances are actually there, then we play the breakout. So you guys could have been one of those players that takes a chance, right? And tries to say, hey, I could have bought it right here at the Fibonacci region right there. Right, that's a possibility, right? Like a 0.32 to 0.618. That's usually my personal laddering range, because I never know where it's actually going to end up. So I'm always risking buying at the 3-2 level, guys, right? Because you don't want to be in that situation where it ends up bouncing off of the 3-2 level, right? And you're like, shucks, I was waiting for 0.5. Shucks, I was waiting for 0.618. And it actually just never happens. And I don't like to be in that situation. So I'll buy some at 3-2. And if I get into that price with only a fraction of what I actually would like to buy, say 25% of my position is only bought there, and it never gets lower than that, then it's okay. I'll just buy the breakout. No problem at all. So the example of a breakout here, risk to reward ratio is actually 2.67. And the next one is actually at 5.98. That's a very, very beautiful ratio, guys. So you basically wait for the breakout after these clear resistances are actually established. Then you just target your wave 3 1-to-1. As simple as that, right? And here you don't even need to close your position, right? You can just ride it to 1618, but then of course, right, it almost retraced back to exactly where it began. So in my personal opinion, you take your laddering buys, right? If you take one big profit from here to if you take your one big profit from here to here, okay, or to here, we'll just say, what's bigger, guys? Tell me which profit is actually bigger. If like you could have done that, right? But tell me which profit you guys see is actually bigger. This the green zone right there, or this green zone right here? It's actually the same, right? What I'm getting to is it's the same, but what this actually allows you to do is it minimizes your risk because you're not overly exposed, okay? Exposure is simply just being in the market, right? I keep seeing shadows everywhere, and I'm looking for Luna, and I don't see her anywhere right now. It's so weird. She's a small little black dog that always reflects on my white walls, so... but anyways, yeah, it reduces your exposure. Exposure is basically how long you're in the market for. You don't want to be overly exposed in a really large position. It's a way of minimizing your risk as well. I minimize my risk by simply not being exposed to the market, right? So I'd rather make sure that I take some of my profits at peak positions or peak price points where there's a lot of activity and, it might end up downtrending a little bit. Then I'll add more in the dip, right? So that makes a lot of sense as well, in my personal opinion. So another way you guys could have done it as well, right, is simple. This is just basically take your fib extension of here. You clearly establish some zones already. You could have bought in here, right? So then if you actually bought in here, then you would have not only profited this region right here, but you would have also profited so this region here, and you also would have profited. Say you got in for around 382, and here. So if we actually stack these two boxes on top of each other to represent profit, well, then now those two small profits are actually much bigger than this one big profit, right? So this is my simple philosophy of making many small trades that will actually completely surpass the gains of one big trade, right? So we're talking like about I don't know, like a 3.9, 3.8, whatever percent gain versus 3.45%, and over time they certainly add up, guys. Okay, so this is a really good example just to show you guys what's going on. Now, do I see this as a flag? Yes and no. I can't really subdivide it, guys. It's on a 15-minute time frame. You don't really do that, okay? Well, you can, but that's crazy sometimes, right? And yeah, people used to call me crazy for actually making those 1 minute super detailed micro time frames, right? Minuet is, I think, what is called there, or sorry, minuscule. That's right. So yeah, I do respect the retracement to 8130. I'm gonna say 33. That's my magic number right here. Okay, so 8133 to 8261. May never get there. Once again, guys, okay, I'm not a fortune teller, but if it bounces anywhere off of these regions, great. If it bounces right here, then that means that it would only have retraced a total of the 382, or not even 382 actually. Let's try to double click on it, but nothing's working. So here we go. I'm trying to open up 236, I mean, which only happens about 4 to 5% of the time, right? Not even. So it's more so in between the 236 and 382 region, which happens to be about 5 to 12% of the time, we'll say. So we'll average out to about 9% to be fair. Okay, about 8.5%, 9% of the time. So it's possible that it happens. Okay, so if we actually break above this very bullish count of mine, which I'm going to show you guys in here. Now, if we retrace to somewhere around, now this retracement was what I'm looking for. Okay, if we retrace to somewhere around here, then this is going to validate my bullish count in the next chart. If right now, if we retrace this wave up to the 0.786 to fib range at 8,426, my bearish count is invalidated, okay? My short-term, I'm going to be very clear, short-term bearish count for today and tomorrow is invalidated. I want to be very clear so you guys don't mix up my words. And the reason why is because, well, if it actually goes up there, this this might be the actual flag that it is. So then we could end up starting a subwave up there. It's a really strong retracement. All right. So I'm just kind of waiting for today to see how it forms. So let's show you guys exactly what this is going to be. I'm just putting this on my Steemit. Don't mind. You guys know the drill. So now, what is my bearish count? My bearish count is simple, okay? My bearish count is unfortunately so pessimistic, guys. I am such a negative trader when you think about it. It's like, why would people assume it's going to go to 618? I'm just pessimistic, guys. Like I'm guessing it's going to go 3.2-ish, okay? because you have to remember that trading will mold your personality, right? When it molds your personality, you find out who you are as a trader very quickly. You trade based on your emotions, right? Which has a lot to do with your personalities and the emotions and your thoughts that you carry with you throughout the day as well, okay? So, I'm always a very pessimistic trader. I'm not really negative in real life, but as a trader, I guess I am, right? Because I'm going to assume a dead cat bounce level. All right. So I'm going to assume a dead cat, I can't say the word right now. Dead cat bounce level. Okay. I'm going to assume a dead cat bounce level with the retracement of a 1-to-1 only. Okay. And unfortunately, I still see confluency. See, or I made up that word confluency. It's not really a word. I've Googled it, guys. I'm going to show you confluency. It's actually a biological term, right? Like a biology term. In cellular biology, confluence is a term used blah 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 blah. I don't want to read that. If I don't want to read something, I just say blah 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 in my head a few times. Cell confluency percentage, right? So I'm just gonna adopt the word. So confluent. Okay, confluent is a word. That means to flow together or merge, right? We try to find high probability setups by looking for confluent reasons and indicators and charts, right? Hey, maybe the RSI is trending upwards. Hey, we got a support candle. Hey, histogram is ticking upwards. Hey, Ichimoku clouds, looks like it's going great there, right? It's just in the perfect zone. So if you find confluent reasons to enter a trade, then you're bang on. They should also make the word confluency. So we're finding confluency is my new word that I've made up since it's actually not a word, but it should be a word because we're not finding confluently, right? It's just completely different grammar. So I'm going to say and structure in the sentence. So I'm going to say confluency, right? We're finding confluency in between the 100 and the 618 region. But now, if all of a sudden Bitcoin decides to get all positive on me and completely ruin my vibe of the whole 1-to-1 extension thing there, right? So then now we're actually going to bring it up here. We're still going to go for 1-to-1 extension, but we're now going to target roughly between the 100 level and the 0.5 fib level, right? So it really depends. Now it could get all the way up to 84.26, right? Which I'll probably end up adding to my position. I'll probably end up adding actually at 84.50 to 84.75, and then I'll ride it to the next wave, okay? So this is why you guys see the reasoning behind my laddering, right? The laddering is extremely important. We don't know where it's going to end up ever. I get these really funny comments on Twitter where people are like, you said it was going to go to 7,800, but it only got to 79.50-ish. And I didn't fill my limit order, right? It's like, I'm sorry, guys. I just have to be very sincerely sorry that my crystal ball is actually not working today. So sorry about that, guys. I was just looking for my water, but I don't find it anywhere here at all. So yeah, sorry once again that my crystal ball is not working. That sometimes I'm like $100 off. But you guys have to remember that these are only estimates, right? We're basically the weather people, weathermen, weatherman, weather women. I didn't want to be sexist there by saying weatherman, but usually like a weather forecaster. That should be the more appropriate word to say, like a weather forecaster, right? Where sometimes you're right, sometimes you're wrong. Even if there's an 80% chance of rain, it may not rain sometimes, okay? You never know. Sometimes we might get 14 millimeters of rain or whatever, 14 inches of rain for that night, but we might only get 11. But say, the guy still guessed there was rain, right? He got pretty close to it as well. And this is kind of how you have to see it, right? Just because he says it's going to rain, right? 14 inches, and you still bought an umbrella, for example, and you protected yourself, right? You can't get mad at the guy because it didn't actually rain 14 inches and only rained 11 instead, but you still protected yourself with the umbrella. That's a pretty bad analogy, but the umbrella is supposed to represent you buying it at around a little bit higher maybe than a possible support range, instead of actually waiting for the perfect price at the very bottom, okay? Because then if you don't catch the very bottom, you get disheartened, you get disappointed as well, and then this FOMO might kick in, and you might buy it at a really ridiculous price, right? So I personally don't like to deal with emotions when trading. I keep it strictly risk to reward, as you guys have seen me do that before. But please, my advice to people is to make sure you're laddering your buys. Make sure you dollar cost average if you're on a schedule as well, okay? make sure that you're not one of the people waiting for a specific price point because some guy on Twitter or YouTube said that, right? Do not follow anyone blindly, guys. You follow anyone blindly, you will be the death of crypto, okay? Or sorry, crypto will make you the death of, what am I trying to say? Okay? It'll be the death of you, and crypto will do that. Not literally, just figuratively speaking. Okay, so don't take that the wrong way and out of context. But yeah, if you're just following people blindly, guys, you're gonna get destroyed in the market. Honestly, like you do not want to get destroyed in the market. You want to make sure that you're able to come to your own consensus and your own opinions, and you follow your own set of rules, right? Because the only person that can be held accountable for your own success or your own failure is yourself. Simple as that, guys. No one's putting anything, no one's forcing you guys to do anything at all in any way. So make sure that you guys are trying to improve your skills as a technical analyst and as a trader by putting in hard work every day of studying. Do you guys know that at the beginning of every single day, I actually reviewed last night's trades and the day before, all of my trades. I review every single trade. Not only that, guys, I also review every single play as well that could have potentially happened that I might have missed out on. If you spend time to review the past, you can improve the future. So if you guys are not putting in the hard work to become a better trader, to get to where you actually want to be, not where you are right now, okay? You guys are here in crypto space for one main reason. And I'm going to say it very, very not casually at all, okay? I'm just going to say it. You guys are here to get filthy rich, okay? You guys are here to get filthy rich, and that's what we are all here together to do. But you have to set that aside, okay? Set the money aside. The money is a long-term goal, okay? It's super far away long-term. But what you guys have to look closely at short term, okay, super short term, is improving your skills as a trader and focusing on good trades, right? You don't focus on good trades to make money. You just simply focus on good trades and leave the money out of it, right? When you leave the money out of it and you focus on good trading, then the money actually becomes a bonus and it starts to roll in. So please, once again, improve your skills as a trader. And don't worry so much about $100, $200 swings. Because like I talked about earlier, guys, Bitcoin's going to hit some astronomical numbers this year. And we're all going to be euphoric. Like the people who are not scared, do you guys see me scared ever of the market? I joke about being scared, but in terms of the confidence, it's there, guys. I don't believe that Bitcoin is going to end up going to zero. If it goes to zero, there's going to be some massive, massive worldwide collaboration amongst every single government to ban Bitcoin, okay? And this is something that's like a wildfire in the prairies, okay? You just simply cannot stop this at all, okay? Imagine really dry weather. It's a deserted forest, okay? The driest environment you can possibly find, and there's fires everywhere raging, like in Alberta or something, okay? And yeah, guys, Bitcoin is like a wild raging fire right now that is so volatile, and all the fire departments can do is try to put it out, guys. Governments like the whole Korea China thing, all they can do is try to put out these little fires, right? But they keep happening all over the place. I'm using a lot of analogies today. I don't know why. They're probably pretty bad analogies, but whatever. They're coming to mind. And as you guys know, I am someone who speaks directly from the mind most of the time. I don't really hold back, guys. So if we retrace this wave up to 0.786 Fib region at 84.26, my short-term bearish count for today and tomorrow is invalidated. Though, actually, I don't want to say that, okay? My short-term bearish count, 84.26 range, this is where it can get confusing. That's the truth, okay? Because it may be considered a flag pattern. You see that formed, but it's too short term, guys. Like honestly, I gotta sit back and think about this in front of you guys, okay? I honestly just cannot see it like breaking up another wave. Okay, I'm gonna completely take that out actually, okay? I'm just gonna make this range in general, okay? There's a possibility that we could get to one of these ranges and then finish C. And I'm gonna still recommend to be interested around this particular region, right? Range is great, but we just don't know. So yeah, range for range is extreme, right? So range is extreme, laddering zone recommendation. I've been making a lot more recommendations lately. You know why, guys? Because I'm just confident, right? It's not that I'm confident. It's yeah, it is, but it's also because I'm adopting it from a very systematical approach, right? In terms of playing like a casino and also heavily weighing the risk to reward scenarios as well and the likelihood of a probability happening, right? And not only that, my win ratio is fairly high recently, and my technical analysis it's been a lot better in terms of accuracy over the past few years. And I'm very confident to be helping out the public in this particular manner. So slowly over time, if you guys have noticed, I've certainly been recommending things a lot more. And trust me, guys, I would not be recommending this if I was not taking them myself. I'm not making these YouTube videos, for the $20 of YouTube revenue that whatever it generates, or to trick you guys into buying into a particular zone, right? They're these positions that I actually take myself. So may as well make the video and share it with you guys. Eric Cho is in a position as well. He's still holding his Bitcoin from 79.50, and his stop is 7,800. Yeah. But if it goes to like 11.7K or even 9K, like that's a pretty big gain, guys, right? So my range is extreme. So I'm not interested in shorting it there at all because I just don't know if this is actually going to be another subwave that goes up, right? And I counted it wrong. But I will be interested in one of two things, right? So range is extreme, laddering zone recommendation. We simply don't know where this is most likely going to trend, right? So if we actually break this point right here, though, okay, this is where my bearish count is going to be invalidated. This point right here is 84.68, okay? 84.468, fib region. Oh, sorry, 84.68 high. If broken, my bearish count to 81 to the region below is invalidated, okay? So we have to remember that because it is invalidated, we may see 8,800 to 9K range. That's the truth, okay? That's what I honestly believe right now. So this needs to be extremely understood, okay? So if this count is actually valid or invalid, it needs to actually break above 84.68, right? And here would be the target, like we talked about earlier. So we're just gonna go to right here. It actually dropped right now. Whoa, it actually dropped a lot right now, okay? I have no idea where the heck this is gonna get to, right? This might even have happened already, right? The drop might even be happening right now as we speak, and this is still an A wave going down, right? So that's possible as well. So I don't exactly know if this is even going to get to B. Now, don't get me wrong, guys. Like, this is just a prediction, okay? I believe that it will make a B eventually. I just don't know where A is actually going to end yet. I don't even believe A is finished yet based on how everything is looking, right? So I'm still waiting for that uptrend right now to get to B, and then I'll be interested in C. That's where I plan to buy, right? And we assume that Elliott Wave says that we could possibly get a one-to-one extension. Okay, so I'm just going to assume a range of about right here, say. Okay, let's just say right now that this is it right here. So we're going to assume that it could possibly hit about the 8800 range, right? That's going to be a resistance. So let's just say, as an example, it only gets to, I don't know, let's just say it gets to the zero point 0.5 fib region right now, which is where we're almost at, okay? We're almost at literally the 0.5 fib region right now. If it gets there, the 8750, we'll see, is going to be one of the targets right here, okay? We bounce off roughly the 0.5 fib region. This 8750, I'll say target is very viable based on EW stating that wave 3 is often the longest and never the shortest, which implies due to the impulsivity nature of wave 3, it should be longer than wave 1 in a bullish market. Assuming an uptrend, right? I know the wording was a little bit weird there, right? So yeah, that's where I honestly believe it could get up to, right there, 8100 range. Okay. Whoops, I didn't mean to delete that. I meant to delete this one over here. So it makes sense, guys? Yeah. So that's where my target will roughly be. I don't know about the time frame. No idea, guys. I don't ever do time frame analysis. So never, ever, ever treat my charts as if I'm predicting time. Okay, I don't do time analysis. So I'm waiting for a possible A to finish, possible B bounce right there. Okay, yeah, clearly this was not a wave, guys, like a flag. Now that we've been talking in this video for a good 30 minutes or something, this is not a flag at all, guys. That is not a flag. I don't even know why I believe people. Like, my gut knew it wasn't a flag at all. And there's a lot of people saying, yep, it's a flag pattern. It's going to break up right now. It's going to break up. No, we're not breaking up. This looks like just the A right there that just shot through that that support. Everyone was like, flag, 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 flag. Come on, guys. Like, that's not a flag. I don't even know why I indulged people by saying that. So, I don't mean to be rude there. I didn't mean to be rude at all, but, yeah, a lot of people post things on Twitter, right? That I'm always keeping up to date on what everybody thinks. Keep in mind that you have to follow other traders, right? You got to follow them whether they're bad or good. And you have to see what is not correct and what is correct, right? If you follow good traders, you pick up good habits. If you follow bad traders, you pick up bad habits. But if you follow both good traders and bad traders, the good ones will teach you stuff and the bad ones will teach you stuff of what not to do. So you kind of get the best of both worlds there, right? So yeah, this is definitely how I see it playing out. So if it breaks above 84.68, that is definitely where I will purchase on a breakout. I will purchase on breakout. And I'm very confident to say that. So guys, I've got my plan. Do you have yours? Right? As a trader, you try to have to look for unforeseen circumstances, because when the unexpected happens, hey, you already thought of it. Or not the unexpected, but when it goes against you, right? Oh no, the market is going against me all of a sudden, but I only plan for one way. What do I do, right? That's okay. That's really okay. Because if you are assuming that it might go down to this region, I'm ready to buy in this particular region, right? And I'm also ready to buy on a particular breakout over here, because I see my risk to reward as beautiful. Like, let's talk about risk to reward right now as well, okay? And we're just gonna put it into perspective of, let's just say you're buying right around this particular region, okay? It actually rejected about how much here? 80. This one was $40. This guess is not much, right? So let's just say it got down to the 0.5 level, which is about kind of where we are right now, $50 off. And let's say I targeted about 87.50 right here, okay? And my stop loss was about 7,800. Actually, 8,000 is a good number for me for this particular play. Because if it goes below 8K, guys, we're already retracing below the 78.6 level, right? And then people are thinking we're going to get even below to 7,200 range. So we'll see, first of all, how this levels out, right? If we see it leveling out the way that we want to in this range, in this laddering range, you guys got to make sure that you define your own stop loss, okay? I am not responsible in any way for your losses. I just want to be very, very clear about that, okay? It's still there where people are like, I followed your trades, I took your advice, but I still lost money, right? Just because we take the same trades and I am doing my technical analysis videos and you guys are watching it, doesn't mean that you're also capable of doing the same thing, right? Because we are managing our risk very differently. Just because you see a guy drive a NASCAR, I'm not saying I'm a NASCAR driver at all, and just because you have a driver's license doesn't mean you can pull the tricks that he does or has his skill, okay? Just because you guys have seen me live trade, or if you see me actually live trade in a live stream, it doesn't mean you can actually pull off the same type of trading as well, right? Because you're not laddering with the same techniques and with the same skill that I am as well. So we have to understand that I'm not saying I'm above you guys or any way like that at all. Please don't take that the wrong way. But what I am definitely saying is that some people are have different skill sets, right? You know, yours might be better than mine, and I might be better than yours, or whatever. You might be better than me in some things. I might be better than you in other things, right? But what I'm getting to is that we all manage our positions differently, and we all shed risk differently. Some people don't even know what that is. So just because I'm saying that I'm interested in laddering here, guys, I might actually still end up breaking even if we end up going down. How is that possible? Even if it hits my stop loss, sometimes I'm very diligent or stubborn rather, and I would rather end up laddering a substantial amount more just to get a better average price if I believe that it's going to bounce up to a point where I could possibly break even, right? This happens all the time, and I teach these strategies that I use in my new lesson videos coming out, believe it or not. What lesson is it actually? Like, how long is that video? Let's see. This one was dollar cost averaging. It was like a 1 hour video, I think.
Hello, students.
Actually, it was only
How are you
35
doing
minutes.
today? And welcome back
Was it
to
only
Ladder
35 minutes?
Strength and Add the Major Win. Be a when you think we all were before. And that's this risk to reward.
Yeah, it's actually about 1 hour long. So my apologies, or 35 minutes long only. My bad. So it's a very short video, but it does cover it in high detail in the other videos that will complement it, of course. So yeah, so once again, even though we might hit my stop loss around the 8K region, right? My stop loss will be 8,000. Right there, okay? I'm still in a great risk to reward setup. I mean, we're talking about a 2.69 risk to reward setup, okay? That's beautiful. I can't complain about that. So that's one scenario, buy and breakout one, okay? I just want to be very clear. Case one, I will purchase on breakout. This is case two, by the way, okay? This is case two right here. I want to write that in here too for you guys. So this is important to understand that we've got many different cases. Sometimes I've got 4 cases for a play. And when you guys got a lot of plays up your sleeves, well, you know exactly how to play it. So think of a trader as a hunter of volatility. You're trying to play I Spy with my little eye, and you're looking at these charts and you're trying to find ways to make good trades, right? And the end goal is of course profit, but you're more so focusing on good trades. So I'm looking at this and I see some cases, right? This right here, this zone from right now where we are 82.50-ish to whatever, no trade zone to me, guys. I don't know if it's going to go up. I don't know if it's going to go down. But what I do want to do is I want to either buy it on a breakout right here, or I actually want to, hold on, this is driving me nuts. OCD moment here. Or I want to ladder my buys if it actually drops a little bit lower, right? For my swing position, not for my day trading position. For my day trading position, it's mainly RSI that I'm just trading off of, right? And a little bit of price action and level 2 momentum, which I also teach. I'm sorry for saying that a lot, guys, but yeah, I teach a lot about momentum trading in general. Momentum trading is definitely one of the best ways to trade, in my opinion. What is it right here? Lesson 4 right here. This one's
Hello.
actually a really detailed class where I'm 58 minutes, right? And I think this video I ended up adding a few things in here, right? So this actually ended up turning out to be a very profitable trade. Well, what did it end up being? I'm just curious. $63 trade. It's actually really funny, but I think I gave an example of how not all trades are perfect in this video. How much of a position was I playing? I'm playing an $8,000 position. It's kind of funny. $8,000 position to make 50 bucks. Yeah, makes me laugh a little bit. So anyways, always look for these unexpected circumstances, right? Because when they occur, you are more than ready for it. So the next scenario for the case one is if you're laddering your buys, right? Or sorry, that was case two. So this case one, it was actually very nice as well, okay? So this is my case two right here. Aren't they both beautiful? I mean, Who could complain about it? My stop loss for this one will probably be about 8,400. Super tight stop loss, right? So this is pretty much the two setups that are available to me that I see that I'm interested in, right? I see a lot more actually, but these are the two main ones that are probably the most juicy to me. So, I probably set my stop loss something like that, right? This looks pretty pleasant to me. Yeah, so this makes a lot of sense. I don't think these charts alone could make too much sense, but if you watch it with the video, of course, it's going to supplement your learning there, right? And then in the update video I'll do tonight when I get home, hopefully I'll find time if I'm not too tired. I'll do an update video using RSI and also MACD and price to action as well. This was more so just a Fibonacci extension, Fibonacci retracement, and an Elliott wave count as well, right? Where I covered both the bull and the bear scenarios. Anyways, so much for my short 10-minute video here that I wanted to make for you guys. Yeah, I guess I'm done for the day. I'd always appreciate an upvote on Steemit, right guys? When you guys go to my Steemit posts, you'll actually get to this particular page right here. All you guys got to do, honestly, is just click on that little green button, right, with your account. And yeah, I guess each vote counts as 3 cents or something. I've been getting about $9 a post. So thanks a lot, guys, for helping me out. My Steam wallet is actually now like 750 bucks, and I've been working on this for actually almost 3 months now, which is like, whoa, it's taking so long to build Steam momentum here. But I actually do not want to I actually don't want to. Sorry, I'm scratching my eye here. Something feels like it's in it. I don't want to buy Steam. That's the honest truth, right? I'm seeing it more like a piggy bank where it's just depositing itself. So you guys can show me a little bit of support there just by clicking on the upvote buttons. Other than that, be sure to click on the upvote button or just appreciate in general. Sorry, that sounded weird. I meant to say if you appreciate it in general, I would appreciate an upvote on it. And you guys can also see all the charts and everything as well on Steemit there. On that, have yourselves a great day. Thank you very much for all the love and the support. And please make sure to support the Winnipeg Jets tomorrow for their very final game. It's 3-1 right now for the Golden Knights, so I need a lot of love from you guys, okay? I think we're done, to be honest. I think we're done. Tomorrow I probably won't even be on Twitter, okay? I'm probably just gonna drink myself to death or something if Twitter, or sorry, not Twitter, if, yeah, Winnipeg Jets actually end up losing. So you guys won't see me on Twitter at all there if they lose. But if you guys see me super cheery tomorrow and on Twitter, it's because I've had a great day since the Jets won, all right? So have yourselves a good one and take it easy. Bye now.